Is the commodities and metals bull market over? Here to discuss that is Amir Adnani. He is one of the most well-known business creators and miners out there from all neck of woods and commodities. Gold Mining Inc. They have Gold Royalty Corp. He's got uranium company. So this is the man to give us a full breakdown on what's happening and what to expect next. So we'll go ahead and link all of Amir's websites right there down below for you to check out as well. Let us know in the comments down below. Is the commodities and metals bull market over? Yes or no? Love to hear from you in the comments. If you enjoyed today's video, make sure you hit the like button on this, send it out in the YouTube universe. And thanks for watching. So Amir, good to see you.
Great to be back. It's been a while.
Haven't seen you in a while. So commodities bull market, is it over? What's happening?
You must be crazy to think that it's over. I'm not saying you are, but it would just have to be a crazy thought to think that. The reason why I say that is because not only is worldwide population expected to continue to grow, but on top of that, the mega trends around electrification and decarbonization, which we want to prioritize, will suck more and more commodity demand higher up, and these sort of what they're calling future-facing commodities, as BHP and Rio Tinto are calling them: uranium, cobalt, nickel, vanadium, copper, lithium, etc. Where are we going to get these commodities from in order to meet climate goals in terms of reducing global temperatures, to make sure we meet net zero goals that every government or major economy is setting? Majority of Fortune 500 companies have set their own net zero goals. And yet at the same time, because of Russia's invasion of Ukraine, because of political ideology being another overarching issue out there, and political conflict and geopolitical issues being a whole new dynamic out there, you also get a bifurcated market. You can't just as easily get your vanadium and your nickel or other commodities that you just would rely on Russia. You just can't expect that to be the case moving forward. Russia's weaponized all of its energy commodities. Look at gas, look at energy, look at what Russia's done to Europe. And so moving forward, not only are we facing greater demand for commodities in order to meet the needs of this world of electric vehicles and making sure we do all of that while taking emissions out of the environment. We got to do all of that on top of making sure we do it in select geopolitically stable regions of the world where you can actually mine the commodities we need safely and effectively. And on top of that, you have to meet the highest standards of ESG now more than ever before when you propose building a project. And so in a world where demand and population growth and need for commodities is in fact growing and will be towards all-time highs, mining the commodities has become one of the hardest exercises, or arguably you could say at times of war, at times of logistical nightmare, at times of double-digit inflation. How do you go into thinking that growing the supply base of a very sort of human resource and logistic heavy industry like mining, it's going to be easy? It's not. And what that means is that we have stronger prices to come for a very long time. And that's why there's actually a bull market intact, despite the fact that in recent months, we've had a strength in US dollars and a sell everything kind of trade going on, including commodities. But I think it'd be a big mistake to think that the bull market is over. In fact, if anything, we're in a whole new bull market for commodities that I think will dwarf anything prior to what we've seen up until now.
Interesting. So you mentioned war, supply chain disruptions, all these types of things, inflation. So I would think as someone that's heard that in times such as those, you want to be in metals, commodities, mining stocks, yet you're seeing this exact opposite type of trend in not only prices of commodities, but in the performance of mining stocks as well. And then we've got this environment where every other day, people are unsure. Is this the economic debt apocalypse? What's the Fed going to do? What do you think has to happen for this movement to resume? And where do you think we go from here?
Look, we've seen this play so many times before. It wasn't that long ago where when we hit these moments of panic and a reset has to happen. Look at March of 2020 with COVID. When the world panics, it collectively rushes to the US dollar. You see a US dollar strength and you see a selling in everything else. We've seen this many times before. The latest fear being a combination of what you do in this new inflationary environment driven by the Fed tightening, coupled with war on top of that, has created this renewed strength in the US dollar. And so the reality is now you sit back and you look at it, and at some point you hit a wall. At some point, the US dollar strength and rally hits a wall, because we go back to realizing that everything else has gotten too cheap and we still need everything else, especially hard assets and commodities now more than ever for all the reasons we talked about. There's quite a bit of seasonality in all of this. And at some point, the Fed will blink. And when that happens, you get a reversal of what has happened here in terms of a strengthening of the commodity price, a pullback in the US dollar. Every time we've seen this movie play in the past, moments like this have been the best opportunities to buy the commodities and commodity equities at major discounts. Because inevitably, if the US dollar stays too strong, it is the worst thing that can happen, in fact, for the US economy itself. How many more rate hikes do you think we can handle in the US market before housing completely collapses? Many individuals are already suffering from the most recent rate hikes affecting their ability to service mortgage payments or rent. Just housing alone is getting to the point of no return with what the Fed has done with the tightening to try to respond to clearly inflation that was beyond transitory, as they like to call it, for a couple of years. But where the dust ultimately settles, when you go back to other sort of cycles in the past in the marketplace, at some point, this has to be resolved by greater economic growth and activity, which will take time. But that is the only way out of the situation. And there's a limit to which the Fed can keep raising rates and keeping the US dollar strong. I would argue we're already getting to the end of that limit. Don't forget, there's strong seasonality to gold. There's strong seasonality in terms of demand for gold that kicks in typically around September onwards. And all of that demand is coming back, be it Indian demand, Chinese demand, be it driven by Indian wedding season, be it driven by Chinese New Year approaching in the next 6 months. A lot of the seasonality issues will come back that really also took a break during the period where we had COVID. Finally, on top of all of that, look at where inflation is. Look at where nominal rates are even today after these hikes. And then you look at real rates, which is obviously just nominal rates adjusted for inflation. And we still have negative real rates. And in a negative real rate environment, gold shouldn't be at $1,700 an ounce. This is, again, this temporary moment in time where there's a reset taking place. Everyone's rushed too fast, too hard into US dollar while we figure it all out. But once you figure it all out, even with rates where they are, real rates are negative. That's the most important relationship after the relationship to the US dollar, the inverse relationship between gold and dollar and gold and rates, real rates. And in this environment right now, gold at $1,700 is a gift because it shouldn't be at $1,700. It should be at $2,000 plus per ounce at a minimum. And that reality will adjust and that recalibration will adjust. And we get these moments in time in the market where things aren't calibrated correctly and then they find their place.
So you've been in this mining and commodities industry for a long time. You took your first company, I think it was the UEC, public when you were in your late 20s. And so you've had your hands and have your hands in all different types of commodities. You've got Gold Mining Inc., Gold Royalty, you've got uranium companies, and I'm sure there's a lot of other ones that, maybe you're not the official founder that are in different commodities. Out of your experience, what do you think the best place is, or what do you think has the most upside? Is it uranium? Is it gold? Is it some other commodity?
Look, obviously, gold and uranium couldn't be any different, right? In the sense that gold is obviously a commodity. Gold is a currency commodity, and uranium is an energy commodity. And when you look at uranium, just to cover that off quickly, you have a commodity that's in a structural deficit that is as recession-proof as it gets. I don't care what kind of recession we're going to have. No utility is going to close a nuclear power plant. Demand for uranium is unchanged, irrespective of economic growth and activity. Uranium isn't copper. It's not a GDP-sensitive commodity. You have power plants out there, coal-fired plants, gas-fired plants, renewable sources. Amongst all the existing sources of power generation, nuclear power plants have the lowest cost associated with fuel. Fuel cost in nuclear power plants is the lowest out of all types of power generation, meaning it's the backbone. It is the last form of power generation to be shut down due to, let's say, demand erosion because of economic weakness. So unless you think literally there's going to be zero economic activity, nuclear power plants are not shutting down. Demand for uranium is unchanged, which means demand at 200 million pounds and production worldwide at 130 million pounds. You have a 70 million pound deficit, a recession-proof commodity. Demand is increasing with 55 reactors under construction, and a world that wants nuclear power because the public wants it, because we're tired of being beholden to Putin and other dictators that basically want to take us hostage when it comes to energy needs. We got heat waves all around the world that means our AC units need to be working all the time. Before you know it, winter is coming and we're going to be back to needing energy. Nuclear power is the ultimate solution for energy security and national security. The Japanese want to turn it on. The European Union has voted to include nuclear power in its taxonomy. The US government is out looking to buy uranium for a national reserve. First time since the 1950s, the US is doing that. And lastly, public opinion polls in the US are at an all-time high in favor of nuclear power, which is why we have bipartisan support for nuclear in Washington. So uranium is unbelievably decoupled from my point of view with respect to everything we just talked about right now. The fact that uranium prices are at $46 per pound is, again, a momentary point in time where we're going to look back and say, that didn't make any sense. What a gift that was. And the equities in uranium trading like they're copper stocks or GDP-sensitive stocks makes no sense. But in major washouts in the market, when you get an everything is on sale kind of market, you get the baby and the bathwater thrown out together at the same time. That's what's happening with uranium. With gold, you have a completely different argument. Again, you have the argument with real rates. We talked about it already, which are negative. You have a US dollar that has become way too strong here, and it's going to have to turn and go the other way. You have immediate seasonality associated with gold that turns positive after the month of August. And we've seen this in previous cycles. One of the best bull runs we had in the last decade in gold was in 2016. That happened when the Fed in December 2015 did its last rate hike. And then everyone said, all right, he's out of bullets. And then we had an incredible run that year. In 2016, shares of gold mining were up 500%, completely outperforming the GDXJ or the underlying physical gold. And we're set up to do the same thing again this time around. Why? Because when you control hard assets, resources in the ground, large projects, same projects we have today, we own back then, except they're far more advanced and more work has been done. These are the ultimate value drivers. I think the real bottlenecks in the commodity markets moving forward are properties and resources in the ground, because the whole sector, starting with gold and also in uranium, has spent the last decade not exploring for more commodities, not looking for more gold and uranium in the ground. And these things ultimately, as they get mined, they get depleted. When deposits get mined, they die a little bit, meaning there's less of it. You got to go look for it. If you're not investing in exploration all the time, as an industry, you're dying a little bit every day because you're not replenishing what you're mining. We haven't replenished in gold, in copper, in uranium for well over a decade. And now, not only do we need to think about the next generation of mines, we got to think about how the next generation of mines will be found, built, and operated in a world where you got geopolitical bifurcation between East and West. You got logistical supply chain issues all over the place, labor market. You can't find people to work at the airport. You can't find people to work at coffee shops. Same challenges will be finding people working at mines. And then on top of all of that, you got to make sure you do everything to the highest standards possible at ESG, which is a very important thing, but it just means it takes longer and more costs to build and bring the next generation of mines online. All of which means today's commodity prices are simply too low, and they're below incentive prices to see new supply come online, which we'll badly need. That's the case for gold. That's the case for uranium. That's the case for copper. And that's, again, what ultimately makes me as an entrepreneur bullish to say, I got to be in the commodity business. I've been in the commodity business for the last 20 years, but this is the best setup I've ever seen. And this setup creates an opportunity where you've got, in my mind, years and years of these windows opening for the commodity bull markets to open up like we've never seen before because of the complications associated with bringing supplies online. It just won't be a flick of the switch. That just does one thing, create upward price pressure on those commodities.
So let's talk about mining stocks. Obviously, you've got companies all over the commodity space. You mentioned Gold Mining Inc. I mean, when you're seeing a market like this, what's going on? Are you trying to make deals? Give us an update.
All the above. We're doing deals. We announced a deal recently with Gold Mining where we took a project called Almaden that we paid $1 million acquiring when gold was out of favor a few years ago. And we cut a deal on that with another junior that's going to pay us and invest money in the project, totaling $17 million. That's a phenomenal deal for our company, right? You buy 1 million ounces for $1 million. You take the same project 3 years later and you transact $17 million around it. We did a deal like that. We're also drilling. You look at the latest drill results we put out down in Colombia at our Lamina project, over 300 meters of 0.75 gram per ton gold and copper, very strong mineralization in the holes that we've put out on that project so far. On the back of a preliminary economic assessment we published on that project earlier this year, the NPV of that project, which is also 1 million ounces, out of a total of 32 million ounces we have, the NPV on that project's economic study alone was greater than our entire market cap. That's just one project, 1 million ounces out of 32 million ounces. And that's the other thing is we've got 32 million ounces of resources in the ground and measured, indicated, and inferred at one of the largest resource bases of any company out there. And so we've done so many different transactions and deals over the last year. Sell projects, drill our own projects where we see really strong targets, spin companies out. We spun out a royalty business out of our company that became Gold Royalty Corp. That transaction alone has crystallized at today's share price and value over $60 million for us just by spinning out the royalties on projects we still own 100%. We've announced the creation of another company called US Gold Mining, which will focus on advancing our Whistler Gold Copper project in Alaska. And we're investing in people. And not only do we have a new CEO, Alistair Still, that came and joined us from Newmont, the world's largest gold mining company, where he had involved in leadership of that company from a corporate development capacity. And prior to that at Goldcorp. But also recently, we've landed Tim Smith to join our company as VP Exploration, also joining us from Newmont. Again, we're going after best-in-class people working at the biggest companies in our sector, and we're attracting these people to our company. And that says a lot about our portfolio. That's an enormous vote of confidence in the portfolio and the quality of assets we have. But it also goes to show how I think as an entrepreneur and how we're building our companies. At any given point, we're looking at ways of unlocking value from our existing portfolio through sales, divestitures, joint ventures, and always committing to making sure the team and our human capital is getting better and improving, not just with anyone, but with individuals that are best in class and senior leadership positions with the best and biggest companies in the respective sectors we're in, whether it's uranium or gold. And that attitude and philosophy has really been a key part of how Uranium Energy Corp has been built, how gold mining has been built, and why we were successful in helping create these spin-out companies that became successful royalty businesses in their respective field, like Uranium Royalty Corp and Gold Royalty Corp, both of which are run by veterans of each respective commodity. Scott Melby, that you've talked to in the past, 37-year veteran of the uranium industry, in senior leadership positions with all major uranium miners, is the CEO of Uranium Royalty Corp. And David Garofalo, who's the CEO of Gold Royalty, over 30 years in the gold sector, always with the majors. And lastly, was the CEO of Gold Corp. And again, this is the kind of the profile of individuals that we've attracted to our companies, and why I think these companies are poised for success and recovery that I expect to see in the commodity sector ahead of us.
1 million to 17 million is not that bad. Well, we hope we see that recovery coming around soon. Like you said at the beginning, you got to be crazy if you think the commodities bull market is over. So we want to thank you for joining today, Amir. For everyone listening, we want to thank you for listening. We'll go ahead and link Amir's websites, Gold Mining Inc., and I'll link his Twitter and all that stuff right there down below. If you enjoyed today's episode, make sure you smash the like button on this, send this out into the YouTube universe. Amir, we want to thank you for coming on today, and looking forward to seeing what happens in these interesting times.
We covered a lot of ground in 20 minutes, however long that was, but I really appreciate it and look forward to connecting with you soon.
All right, Amir, thank you.